Hey, welcome back to our Investing Summit. This is Darius Dell here, Senior Analyst on the Hedgeye Macro team. I'm joined in the studio with Neil Howe, renowned demographer, author, economist, historian, you name it. Author of over, I want to say, a dozen best-selling books, including Generations and one of my favorite books, The Fourth Turning. You are one of the world's most foremost experts on generational theory, paradigm shifts in consumer behavior, public policy, et cetera, et cetera. You advise clearly our buy-side clients, large corporations like Disney, large organizations like the Marines, et cetera, et cetera. So you name it, you touch it, you name it. So that clearly gives us a lot of scope in what we can talk about. But one thing I think is so very important, because it's on a lot of investors' minds right now, is this concept of a U.S. recession. Where are we in the business cycle? What's the probability of recession? What are the indicators you're looking at to sort of gauge that? And ultimately, what do you think is the most appropriate sort of path forward as it relates to policy and the policy response to recession?
I like that. You just jump right into it, don't you? You don't waste any time.
No.
Just cut to the bottom line.
Totally.
That's a great question, and it makes you think about exactly how to phrase that question. Mm-hmm. Where we are in the business cycle is one thing, but exactly when the next recession is going to come is something else.
Very true.
And just to mention that you and I think in about a month, we're going to be doing a big covering the waterfront
Deep
on
dive
recession indicators. Yeah, looking at all of them, looking at their track record, and what do they indicate? Some indicators, particularly employment-related ones, for example, or sentiment-related ones, are very good at telling you where you are in the business cycle, because they follow a very good trend on the business cycle. Future versus current, how you think the economy is doing as a sentiment indicator, for example, are very good at telling you where you are, but they're not necessarily good at telling you exactly when it's going to end.
Yes.
Others are really good at indicating when it's possible that the downturn might happen, like ISM, like all the PMIs, whether it's market or ISM, whatever they are. But that's the question. So are you going for, and others are really good at telling you when the recession is just about to begin. Like, for instance, the unemployment rate turns up more than 0.5 or 0.6. That's a great indicator that either the recession has already started.
Totally.
So that's great, but it gives you no lead time. So you understand all the problems here. And then you've got the problem about false positives and false negatives. So every recession indicator has this problem. Now, the one that I talk a lot about on my podcast is the yield curve inversion, particularly the 3-month 10-year inversion. This is the one that was originally identified by Reuben Kessel way back in 1965, and it's the one that's most validated by the Fed. It's been good for 11 of the last 10 recessions. So it's had one false positive, and that was in the late 60s.
Was there a policy sort of response that prevented a recession?
There was, yes. There was a very timely reduction in the Fed funds rate, although at that time they didn't target the Fed funds rate. That was that was
the money supply.
Yeah, they just but it effectively was that, and it did not result in a recession, although it did result in GDP growth. The late 60s generally high GDP growth. GDP growth for one quarter sank all the way down to like 0.2, so it was almost negative for one quarter. So they just
saved it.
That was before Greenspan. That was the old school.
Martin.
Yeah, that was McChesney Martin. William McChesney Martin, who was our, was there forever.
Totally.
And he avoided it. Otherwise, it's been flawless. And we start our count by looking at 5 or 6 consecutive market closes, with those two being, a negative difference. And that happened in the end of May of this year. It actually almost happened in the end of March. Actually had 5, but it didn't go for the 6, so I didn't count it. But at the end of May, it went, we've been under almost continuously. Last 2 market closes, we've been up. So, again,
five basis points away.
But the indicator doesn't care about that. Once it gives a certain number of closes, it very often, by the way, dips up and out, goes into inversion and out of reversion. But the general count is about 6 to 16 months, which gives us to the end of this year to September of next year. Now, I'm sure that Elizabeth,
before the onset of recession, or before the recession is
the onset of the recession.
The onset is.
Now, I'm sure Elizabeth Warren wants it sooner. And I'm sure that Donald Trump wants it later.
Yeah.
And in fact, if it is September, we could very well be in it in the election and not even know it yet.
Oh, absolutely.
And I'm sure that that would be Trump's great scenario. You know? So, but that's one I've been following, and I know one that you and Keith talk a little bit about on the Macro Show a lot is the relationship between earnings recessions and economic recessions. Obviously, they are associated. One generally tends to precede the other, the economic, earnings recession, economic recession. But here you have a lot more false positives. I mean, we had one in 2016. We had one in the mid 80s. I mean, those are both coincided with big energy price collapses, interestingly enough.
Yep.
And we had another one actually in the late 60s, exactly when that was the false positive for the yield curve inversion.
Indeed.
That was another one. But generally they have, most of them have preceded recessions. So, we got one going now.
Yeah.
I guess we'll see what they come in, but I think, FactSet and all those guys, I mean, you track that more than I do.
Yeah. So we're currently, if you go to those slides 76 up, Josephine. So we've seen 22 companies report third quarter earnings. On aggregate, their revenue is up 3.5%, but their earnings growth rate is down 13.3%. Right. Now, it's not going to stay at down 13.3%. Clearly, these companies have gotten up front. Or sorry, not slide 76, 73 rather. My apologies. Clearly that's not going to stay down there, but we still believe that earnings in Q3 of this year, as they're cycling that cycle peak growth, that cycle peak growth rate in Q3 of 18, we think earnings could be down anywhere between 5 to 8% if you sort of do some of the math that we're doing with respect to operating margins, because again, we're seeing so many cyclical factors become a real big headwind to margins. We have the dollar strength, on a year-over-year basis, the dollar's up, roughly 3 to 4%. You're seeing sort of unit labor cost inflation through the lens of private sector wage growth, and obviously sort of employment cost index, basically at the cycle highs as the most recent month. And then obviously you're just seeing a deceleration in growth and inflation. So the prices received.
People don't understand the wage inflation. And last time the employment report came out, the big news apparently was the paradox. Why were average wages, going down? But they didn't look at non-supervisory average wage. They're not controlling for the quality, because we're bringing in a lot of low-skilled workers now. So of course the average goes down. But if you look at the Atlanta wage tracker, you look at anyone who actually controls for the skill level, and it shows you this thing speeding up. We're
at cycle highs.
Exactly.
So that's slide 39.
Yeah. So great, you got that. You got a little sound and light show here. That's great. So, and this, by the way, leads into the question of you want to look.
Oh no, you can speak. I'll just leave it on the board. You can speak.
Yeah. Okay. This leads to the question of if and when we get to this next recession, is it how's it likely to turn out? Is it likely to be mild? Is it going to be like, I don't know, 91, one of these kind of relatively mild recessions in terms of GDP recession?
You could barely see the recession in 01.
Yeah, 01 would be another one. Yeah. Or is it going to be severe? I think you can make the case for severity in the following way. First of all, profit margins. Profit margins have a ways to come down.
Slide
now.
40.
We're record high. See, you got everything here. This is great. It depends how you measure it, but if you don't, if you just take BEA, you're at like 10, 11%, measure, but they could turn in half. Now, what would that do?
Well, they always mirror. This chart shows they always revert back down to 6, 7%.
But if you are reverting to mean, we're a lot further from the mean. That's my whole point. Yeah. I think the other issue is corporate credit.
Oh yes.
A lot of corporate credit, non-financial corporate credit, record share of GDP.
Yep. About 79% roughly.
Very large share of that is obviously high yield, and even of the investment grade, a lot of it is triple B. I mean, you just have a lot of risk
quality
skewing.
Of credit is skewing down the curve.
Yeah. And I think another one is interest rates. So how low are we to zero? How much can the Fed respond? So most monetary economists I talk to just assume this next recession is going to last a lot longer because the Fed can't really do much. So normally, if, in any prior recession, remember, Europe has been through this already a couple times, but we haven't been through it since 2008. And normally when you're Fed funds rate is much higher, you have a lot more to cut. So you can go way into negative real interest rate territory. Presumably, we will not be able to do that, right? We'll just go down to zero and just stay stuck there, which means the whole thing will last longer because we'll want to have that kind of stimulus, unless we opt for the fiscal route. But of course, that depends on politics. Well, and that would be my final comment, is how's the next recession going to interface with where the United States finds itself politically?
Well, that's a great sort of segue to our what I wanted to talk about next is sort of, this on both sides of the aisle, you can sort of see this sort of groundswell of support for something that effectively resembles modern monetary theory. Now the deficit, sort of central bank finance deficit spending. Now what we spend money on will be determined by who ultimately sort of takes the White House, who takes Capitol Hill. But ultimately, you're starting to see much a greater groundswell of support for these types of policies. Walk me through the sort of likelihood of that sort of being implemented into the election. If that's a rising high probability scenario, do you think that it could be potentially, and then sort of after the election, what that could potentially look like?
One of the fascinating things that's happening now is you see the spread of this sort of, populism and authoritarianism around the world, both on the right and the left. That's what makes it interesting. And my mantra on this, I think people are too much fixated by the difference between right versus left, and not on the difference between where both of these sides are going, right? Yep. Yeah. Which is toward a greater role for government, and a greater role for some kind of fiscal policy which brings the community together. And by some definition, either a right-wing or left-wing definition. But both sides are going there. And I might just say, fitting for this day, we might just comment on PIS, the Law and Justice Party, just won in Poland, so it's in there for another 4 years. Yeah. And how are they getting their support? How is this kind of right-wing populism getting appeal in Poland? They are right-wing culturally, but they're left-wing economically. So they're doing all of these benefit programs, for young families with kids and so on, and that's how they're getting their support. So you can see how Trump is beginning to remake the Republican Party in this direction. Now, Trump probably will not complete that transition, but ultimately the Republican Party will become a right-wing populist party in the same in the same mold. Yeah. While Elizabeth Warren makes it a left-wing.
Just shift the whole scale to the left.
Exactly. So it'll be the same thing, but with just a different cultural veneer, right?
Gotcha.
But anyway, that's where we're going, and all of it feeds into the greater possibility of radical fiscal innovation, which is modern monetary theory, is what you're talking about, right?
Absolutely.
And that couldn't, it'll come just in time when we're stuck there at the zero bound.
Yes, absolutely. So there's this view that monetary policy is largely out of bullets. I think that view is certainly warranted if you believe that, you look at sort of the economic outcomes associated with monetary easing have become increasingly sort of, you're hitting lower highs and lower highs, the response is lower and lower and more muted each time. So it does
it's kind of like an insulin-resistant diabetic.
Yes, exactly, exactly.
It no longer responds to the medicine.
Yes, exactly. Well, the markets respond to the medicine.
Yeah.
If you tend to see
the economy doesn't. Yeah.
The economy doesn't. So you can sort of get this massive bifurcation in the markets. But ultimately, what's likely to happen? You're going to be unable to sustain record corporate credit in the United States as a share of GDP, and certainly in equity market, by all sort of historical valuation metrics, are probably a touch overvalued,
right?
To the extent that you can't get a sustained recovery in corporate profits. So to me, going back to that chart on slide 40, into our broader macro view, this is really the ultimate bear case for the markets, but potentially the ultimate bull case for sort of society and the quote unquote populace. The mean reversion of these lines can actually, so we call this at least prior to 2016, 2017, it was largely the jobless recovery. You had this big divergence in terms of market outcomes relative to sort of the mean economic outcome of the mean median family. Could that reverse, and is that something that we've seen? Is there a historical corollary of that reversing in such a strong, sustained fashion? And secondarily, was that historically very negative for markets?
There is an historical example of that, and that would be the 1930s, right?
That's not good.
Well, but I mean, it's the obvious one. So all the measures of Gini coefficient inequality, to the extent we have them, either by income or by wealth, peaked in 29. But by the late 30s, it had hugely improved. And certainly World War II was great. That was wonderful. You know, total war is great.
It's great for GDP.
And also equalizing wealth and income. You have huge inflation, which basically inflates your way out of all the wealth of a lot of people who are locked in. Think of all the people who are locked into nominal war bonds and stuff, and all the wealthy people. So you inflate your way out of that. And then you have all of this new middle class, this whole new post-war economy open to all comers, right? Mm-hmm. Open to this broad new middle class, went to college for the first time, you know, the GI Bill, everything else, right? So as a result, we brought down inequality enormously, and inequality reached its all-time low in the late 1960s, when the last of the GI generation who went through came of age in World War II, was beginning to retire. Mm-hmm. And they created an America that was largely, you know, a very strong suburban middle class. And they hugely upped Social Security benefits. We had enormous increases in Social Security benefits in the late 60s, early 70s. We gave the 100% COLA indexing. We had Medicaid, Medicare, you know, the Great Society. We had all that stuff coming on stream. And then they began to pass into retirement. Then we had Watergate, and then boomers took over, and it went all the other direction, right? Then we had deregulation, tax cuts, and then everyone began to fortify themselves. But I've always said that boomers are very comfortable with a more individualistic society. And when they were still in college, we thought that boomers just wanted individualism in the culture, to say what they wanted to say, you know, to have the kind of music they wanted to have. Mm-hmm. But later on, we knew that the individualism extended to the economy as well. Totally. So this is very much a generation which prizes individualism in every aspect, every realm of life. And now they are the elder generation.
Well, that creates a lot of tension between the younger generations, which very clearly value social cohesion, community.
Yeah. I mean, you see it. You see it everything from, you know, the sharing economy to social media to everything else. And you see it in, we had one question that we used. We did a survey for the Congressional Institute. It you know, it's one of those institutes for the parties in Congress. Mm-hmm. Actually, they did their surveys for all of the GOP. Mm-hmm. So we surveyed millennials for them. We gave them a rather disturbing finding that if you ask the question, you ask Americans of all ages, what would you rather government should do? Should government reinforce the principle of self-reliance, or government reinforce the principle of community? Just that one question. And you separate over 50 versus under 30 voters by about 30 percentage points on that question. Wow. And it doesn't matter which party they belong to. In other words, the gap between old and young Republicans is just as large as between old and young Democrats.
Wow. It's really interesting.
So that's the difference.
Can you unpack what is specifically driving this sort of desire for community, and how you think that's likely to play out? Because clearly there's going to be some sort of tension. You know, you have.
It already is.
There are. Well, yeah, that's an understatement. That's an understatement.
We saw in the midterm in 2018 mm-hmm. the largest age split between, you know, again, under 35 and over 50 that we've ever seen in an election. And that was, in other words, voting for Republican versus voting Democrats. Millennials voting for Democrats. 2/3 of them voted for Democrats. That's very large age split. We forget, and everyone says, well, the young always vote for liberals. Actually, we forget that back in the early 90s, Gen Xers were actually slightly voting more for the conservatives. Totally. You know, Gen Xers were not that kind of generation. Yes. And so, we forget this in retrospect. But this is a generation that very much wants, again, these whole themes of community, authority. And I've often said that this whole notion of a fourth turning, right, mm-hmm. is predicated on the notion that is just the opposite of an awakening, very mm-hmm. much the opposite of what we had in the 1970s.
Can you take a step back and actually describe in some detail what those mean?
These are different phases of the social cycle, mm-hmm. basically lasting the entire length of a human life. So you're talking about a cycle that lasts 80 or 90 years, right? Mm-hmm. But in one phase, you know, the first phase we have a lot of order, a lot of community, maybe more of the community than even a lot of people want, right? But society has a great deal of, and these tend to be post-crisis eras. Everyone comes together, everyone, circles the wagons. These are the great barbecues of American history. We just sort of, and individualists and often minorities are left on the outside. But it's very much a time of social solidarity. That was equivalent to the American high, the presidencies of Truman and Eisenhower and John Kennedy, for example.
Yep.
It was a period when boomers were children, the silent generation was coming of age, and the GI generation was slowly beginning to enter midlife, and ultimately they took the presidency in late 1960 with JFK, right? A new generation born in this century. You remember that was JFK? Okay, so, and then an awakening is a time when everyone wants to throw off all that conformity and community. They want to self-actualize, and they want to get in touch with their own individual desires and needs. And society individuates. Society wants less of this order, right? And then in the third turning, which is what we had particularly during the late 80s and 90s and early 00s, is a time when everyone enjoys the individualism. And all the old institutions basically step back, under Reagan, step back and say, this is great. And everyone's happy with it. But a fourth turning is a time when suddenly people want more order than institutions give. So this is the opposite of an awakening. It's the opposite of an awakening. In the awakening, institutions are supplying more order than people want. So you can see this is a reversal. And this is happening around the world. This isn't just happening in the United States. In fact, it's not even happening primarily in the United States. It's happening in the UK. It's happening throughout Europe, particularly Southern Europe and East Asia. Brazil, you look at Narendra Modi, Xi Jinping, Shinzo Abe, even look at Rodrigo Duterte. Here's what's interesting. All these leaders are more favored by the young than the old. That goes against the whole idea that we used to think of back in the 70s and 80s. You remember when we had Marcos in the Philippines, for example. It was the older Filipinos who wanted him, and the young didn't want him. That has reversed. And that, to me, is an interesting indicator when you go from a post-war mood to a pre-war mood or a pre-crisis mood, is when younger people start wanting more order, more security than older people. Right?
And is it this drive for security that's
security,
driving this?
Risk this is a profoundly risk-averse generation. And they don't like an economy of sort of, entrepreneurship and individualism and winner-take-all and all that stuff. As I've pointed out on many presentations here, probably some with you, this is a generation actually less inclined to start new businesses than young people have been for several decades going back into the past. The stereotype that millennials are all starting new businesses in Silicon Valley is completely off the mark. A lot of the best and the brightest go to Silicon Valley to get very comfortable jobs with their credentials with Gen X employers or boomer employers, right? Who have taken risks and started these big companies. But millennials want a more ordered world, and you see that around the world, and it also leads to a certain kind of ethnocentric populism in much of the world, which is not really associated with the left at all. It's very often associated with the right. It's certainly, you look at Narendra Modi. It's great for Hindus, not so great for Muslims. And then you look next door in Burma, great for Buddhists, not so great for Muslims. You look at China again, so the great Han, everything is around this new kind of Han China Confucian-oriented sense of hierarchy and a stability, just like they had under the old emperors. So this is the transition that's taking place now. And it's, I think you could fairly say that in those broad outlines, it's similar to the 30s in that sense.
Which obviously weren't great for markets.
Well, that wasn't a great time for markets, but at the bottom of the 30s, what a great time to buy. Oh my God, buying opportunities, seriously.
Totally. Well, the transition out of a fourth turning, at some point prior to that transition, is a great buying opportunity. But you would argue that we're not necessarily close to that point yet.
No, we're not. No, we're certainly not there yet. But that comes at a time when you're actually truly beginning to transform institutions and create new institutions. And that's something that millennials, I think, want to be on the ground floor of when that happens.
Yeah, so you're effectively what you're telling me is that AOC is not an individual. There'll be more like her on both the left and the right. In terms of
there already are.
Yeah.
They just aren't known like AOC is.
Yes, absolutely.
Like the squad, the gang of four, But that's a case where Trump really invites that. I mean, I'm sure that if Trump could run against the gang of four in Congress, that would be his perfect scenario. He would love to do that, right?
Oh, absolutely. So you mentioned China. I think it's obviously with the USChina trade dispute or trade war, whatever you want to call it, clearly having a sort of, it's front and center with a lot of investors' minds. We continue to believe that the cycle's been the tail wagging the dog.
But it may be, because, as you've noticed on the macro show, everyone's so focused on China. Every little thing that comes out of the Trump White House, oh, gee, I just think it's a love fest today. And suddenly the market goes, I mean, it's crazy. And it really makes you think that people don't have anything else they're looking at, right? Yeah. They don't have any other ground. Where are we in the cycle? What are all the indicators saying? What's happening in the economic momentum of Asia right now, of Europe right now? We see all that stuff.
It's horrendous.
And it's as though none of that matters. They're just looking at one thing that could turn it all around miraculously. Well,
the Occam's razor investing, the issue with using Occam's razor approach to investing is that obviously markets are just sort of multi-dimensional, they're multi-duration. Investors across the globe are looking at all sorts of different things to determine what the appropriate price of a particular asset is. And so if you have a very narrow focus on sort of what you think is driving, quote unquote, the market or the markets, and there's an outcome associated with that narrow focus, you could actually potentially set yourself up for a lot of pain because you're not looking at all the other potential indicators. One of the things we continue to talk about is what is the probability that the U.S. economy, the Chinese economy, the European economy don't accelerate in Q4 as the comparative base effect models would imply they probably should. In terms of just probability, but from a frequentist probability perspective, it's likely that these economies start to accelerate. But if you go back to Q2 of this year and Q3 of this year, both China and Europe were supposed to accelerate based on the base effects. Didn't occur. In fact, we're slowing at the fastest rates. If you look at the October and September leading indicators, if you look at the August hard data out of these economies and September hard data, we've got the Chinese import and export numbers, new cycle lows on the import side, and European industrial production this morning, a new cycle low.
But don't you begin to have to talk about kind of negative synergy on the fundamentals? In other words, they're all feeding each other in a negative direction. And secondly, negative signature on the psychology, on the sentiment.
That makes it worse.
And clearly that's why we have recessions, right? Yeah. And particularly since you've spent 8-9 years, at least in the United States, not so much around the rest of the world, in a non-recession format where everyone's kind of leveraging up, kind of the working up to their next Minsky moment. So that's what we're talking about. And that's why we said, what are the reasons why the next recession can be more severe? Well, it's not housing this time, but it's something else. It's always something else, right?
No, it's always, if you look at the history of recessions, particularly when you analyze recessions through the lens of the credit market, it's always one sector of the economy, the credit risk migrates to the other sector. So you go back to the 91 recession, it was the housing sector that really got things going in the wrong direction there. And then in the 01 recession, which was a very small recession, it was the corporate sector that got things there. And then clearly the Great Recession, the housing sector again. So you can make the case that it's time for the corporates to sort of bear
it's time. And that was the one sector that got off scot-free, and they all thought, well, this is a great time to, and that's where we've seen a lot of the leveraging up. I mean, all of those, the kind of leverage lending, kind of a new term everyone's using now. But I think the interestingly on the China side, one thing we haven't seen much pairing, at least in the news about, is the pairing of what's going on in the trade talks with what's going on in Hong Kong. So, and Hong Kong and Taiwan. As you know, China is redoubling its effort to strip Taiwan of all of its remaining. I mean, they're going out to Samoa and I don't know, these little islands that still manage
They're making islands.
Well, no, but I'm talking about the tiny little republics in the middle of the Pacific that still have a relationship with Taiwan.
Gotcha.
And they're getting them to back down. So China's going out there and browbeating even the tiniest country left with a relationship with Taiwan to meanwhile, this thing is going on with Hong Kong. Now, the result is that the Taiwan is becoming more sort of anti-China than ever. In fact, the leader, not Kuomintang, the other party, is probably going to win this coming election, whereas she wasn't originally expected to win. But this, I think, what's happening in Hong Kong is people aren't focusing on that in terms of just a very simple question. How long can China tolerate Hong Kong, the situation in Hong Kong? Because what's happening now, the protesters are amping up the demonstrations in basically a bid. I think it's not just the limited demands before. Now it's we want democracy, we want civil liberties, we don't want one country, two systems, all that. At what point will China say we cannot compromise with this, and the longer it lasts, the more it could turn into a virus that's already beginning to affect Taiwan. It could begin to, migrate into the mainland. It's an embarrassment. We cannot. You know how touchy China is about this stuff.
Totally.
And the big lesson they took away from Tiananmen Square is that we did what the Soviets didn't. We did not have glasnost and perestroika. That's why we survived, right?
Yeah.
And the Soviets made the mistake, and that's why Putin and everyone else in the Soviet Union to this day regrets what they did. The greatest tragedy of the 20th century, says Vladimir Putin, right, is that we lost that system.
Yep.
So China thinks they made the great decision to go into Tiananmen Square and put that down forcefully. I cannot believe that the leaders aren't thinking the same thing right now. And I do think that one of the reasons why they're beginning to pursue this much more limited trade deal is not just because, well, they think they can, they don't like Trump and they're beginning to think maybe they can look beyond Trump. But I think also that if they do go into Hong Kong, they know any broader deals could be off the table anyway. So why should they commit to one right now?
Yeah. I
do think that Hong Kong introduces a very interesting new near-term dynamic into what's going on.
Yeah, it definitely does. And it's a loaded question, but clearly, history is sort of fourth turnings have coincided with sort of kinetic warfare. Do you think that there's a probability of the U.S. going to war with China, either through military or cyber, or in some form or fashion? I mean, clearly we have a trade war, but do you think it has a potential to get much worse as we progress throughout this fourth turning?
That's hard to see right now, I mean, realistically. But I think there's so much that could happen on the economy and finance that and what could happen in domestic politics that it could feel like a war.
Oh, yeah.
I sometimes even feel, for example, and this has been raised with me many times, is the possibility of secession movements within the United States. I mean, why do we always talk about foreign wars?
Yeah.
Why don't we ever talk about divisions within this country?
Yeah.
What's going to happen if Elizabeth Warren gets elected and somehow, does the nuclear option and gets her agenda through the Senate somehow, and then a number of states don't like it and they decide to withhold their tax? I mean, have you ever thought through this?
No.
I've actually occasionally had people in the military, including the Marine Corps, ask me, out in California, they have Coronado Base. A lot of Marines out there. I said, what do we do if California does this? I mean, these are people who seriously ask that question.
Wow.
This brings up Fort Sumter scenarios, doesn't it?
Oh,
Do you remember how the Civil War started?
Yes.
It was not due to, any overt act of aggression. It was due, there was some. So what happened when all the southern states seceded was that in general, all the postmasters and all the federal commanders, all went to West Point, right? They all basically just wrapped up their flags and said, okay, I guess we're not wanted here,
Yeah.
We'll go home. But then there was this crazy bastard in Fort Sumter who said, damn it, I took an oath.
Yeah.
Right? I'm going to be faithful to this country. And that's what lit the war off.
Yeah.
So you do think about these things, and you think all kinds of different scenarios for crisis. Yeah. They're not necessarily always the ones we're familiar with. I do think there could be an interesting cyber war component.
Oh yeah.
Which is sort of warfare in a very different dimension than we've been used to. A lot of people are saying with Trump in his response to this drone and cruise missile attack on the Saudi refineries is, well, why doesn't he just shut down all the lights in Tehran for 48 hours, And Iran's saying, we will treat that as an act of war. That's another interesting dimension, Darius, isn't it? So kind of have a different war scenario.
Yeah, totally. Well, speaking of, a lot of questions on war in the queue. We obviously just addressed that, so I don't want to go sort of beat that too hard because that's hard to predict.
Yeah, it's hard to predict.
Try to bring it back to financial markets at the bare minimum.
If we can restrain ourselves.
If we can restrain ourselves from the coming U.S. Civil War.
Okay.
All right, Michelle's asking, how can Japan or Europe with bad demographics, high debt, and low growth get out of their current situations? Have we ever seen a scenario in history where we've seen economies come out of these types of sort of secular stagnation themes? Does it always end in war and inflation?
Well, we've only seen one modern example of anything approaching this. Again, it was the 1930s. It was a time of very low birth rates. Of course, societies still were generally much younger then, and the decline in the birth rates wasn't anything like we see today.
Totally.
Right? So the quick answer to your question is we have no historical examples. But presumably they can adapt and adjust. I think Japan has adjusted and adapted about as well as you can expect.
Totally.
But we continually see new frontiers being breached on our way to defining what an aging society is. And I will say, everyone's focused on Japan. Japan has come to be the sort of the canary in the coal mine of an aging world. And the reason is they had a low fertility rate much earlier than the rest of the world. That's why they're way ahead of the curve. That's why they're already depopulating, why they already have such high dependency ratios in the elderly and so on, and all these liabilities. But other societies are aging much faster, right? And a great example of this is South Korea.
Yes.
Now, South Korea just went last year underneath kind of the sound barrier. They had a total fertility rate come in 2018 below 1. That's the first time that any full nation has done that.
Never heard of it.
So we gave that a big...
big red flag.
Yeah, we gave that a big red flag, and we wrote about it because South Korea has a combination of extremely low fertility. They have almost an exaggerated case of almost everything that leads to low fertility. They are heavily urban. They're one of the most urban countries. I think about 1/4 of everyone under age 30 in South Korea lives in Seoul.
Yeah, wow.
So that's the first thing.
Super
urban.
No girls.
City life is associated with lower fertility.
Yes.
High education.
Yes.
South Korea has one of the highest. In fact, they have the highest rate of college attainment of young people in the world. Wow. Something like 65, 70% four-year college degree. And it's incredible.
You wait till Liz Warren's president. I'm joking.
There we go. And then you have this extremely strong Confucian ethic, which is a very binary sense of gender roles, which mean that women, once they marry, find it very hard to survive economically. So what are women doing? Not getting married.
Not getting married, yeah.
And they're not having kids.
Yeah.
And in the Confucian scenario, the women have to basically not only serve their kids and their husband, but also serve their in-laws.
Oh.
One more reason, right? Don't get married.
Yeah.
And it's also a system in which the huge priority to educating the young so that they spend all their money with maybe one child, making sure that they get into the university, one of the 3 big universities in South Korea, or even sending their kids abroad to an English-speaking country to learn perfect English. So you have this enormous skewing of incentives away from having kids. And if anything, having one kid and spending a lot of money on them, and so Confucian societies as a whole have very low fertility right now. That's not just China; it's all over East Asia. But presumably, these countries can take that burden and survive. There's no reason in theory why a very rapidly aging society can't continue to have productivity growth, among the people that work, right? And so you could have rising standard of living or growth or rising real wages for anyone who's still working, but its GDP could be falling at the same time.
Totally. You're not absorbing new entrants into the labor force.
You're not absorbing.
Or there aren't any.
Well, they aren't. And that's the other thing about these Confucian societies. They tend to be very ethnocentric and tend to be very averse to. Now, what they are doing now, both Japan and South Korea are doing it, they're bringing workers in on special visas, kind of keeping them separate and making sure that they're sent home. And, so this is a challenge a lot of people are doing as well. And they're giving huge subsidies to people to have kids, but they're not working very well yet.
Cool. All right, let's keep moving. Thank you. Liz is asking, says, in the fourth turn, you said that during the 10 years after the crisis, and we'll assume that the 08 recession or the great financial crisis was the crisis, we'll have avoided confronting the crisis and continue to kick the can down the road. It seems like that's been spot on. So do you agree that we're still kicking the can down the road, or do you think we're finally getting to the point where we actually have to confront and reorganize and redistribute institutions?
Yeah, it's interesting in the fourth thing. We also talked about a moment of regeneracy. When you kick the can down the road, but there comes a point at which you realize you've got to suddenly change. In other words, it goes from gridlock, doing nothing, staving off choices, to suddenly, okay, we got to stake everything on this choice, right? And that's what we did in the 1930s. And we did it to some extent during the Great Depression with the New Deal. And then ultimately, of course, came World War II, and the country was all in with that. And it really gave numbers momentum to the New Deal. And of course, we came out of that a transformed country in the late 1940s. It's interesting to look at that scenario now, because right now we're in this kick the can down the road, total gridlock. I mean, there is no one in Washington, D.C., where I live, right? There's no one in Washington, D.C. doing anything. I mean, not only are they not engaging in any long-term issues, they're not even doing really any short-term issues. They're not doing anything. We don't even know whether the new NAFTA is going to be approved. We don't know anything will be approved. Totally. We don't know if Congress has to do it. It's basically nothing is happening. So, the White House is acting through these, these edicts and these new forms of executive authority, and then Congress is resisting, and the media is criticizing. So, basically, the state is adrift. And this is the other thing you have to consider. Whatever happens in history to a country beset in that condition means its response is going to be ineffective or non-existent. So what happens eventually is everyone says, to hell with it, let's just go with something, right? Let's go with something. And that's what happens. That's why I think 2020 could be a very interesting election. Because I think the mood of the public is, one of the reasons why everyone voted for Trump is we just got to do something different, right? Yeah. Trump is a wrecking ball. Let's vote for him. Let's just get him in. And now that he's been in, why not bring in a Bernie Sanders, Elizabeth Warren? Let's have the ball come from the other direction and wreck it the other, totally. Right? In other words, something to get the country moving again. And you could say, well, that's pretty destructive. That's not moderation and reason. But on the other hand, it's how people ultimately get mobilized. You push them out of their comfort zone one way or another. And I think in some sense, that's what the voters are looking for. And I think it's a moment of maximum political instability, particularly with Gen Xers, who have become the dominant voting age generation today.
Yes.
And they're just a completely loose cannon. They have no loyalties to any party. They have loyalties to nothing.
To nothing.
They're just looking for, just show me something that works. And as soon as I see a glimmer of that, I'll get on board. Gotcha.
That's what does work. So this is a great question. I think Mark is sort of asking along these lines, this sort of generational tension. At what point do millennials raise inflation expectations amongst boomers who clearly want to keep inflation low? They're living on some form of fixed income, certainly as they continuously retire. At what point does this sort of transition, this demographic shift, this tension you're sort of highlighting, cause a material shift in both short and long-term inflation expectations?
Next recession.
Next recession.
Next recession, we'll go to an incomes policy. We'll go to, modern monetary theory, and we will force inflation.
We'll force it.
And when that happens, you want to be all into tips.
Tips,
right?
gold. Yeah.
You want to be tips and gold and a lot of this stuff. And just imagine the gains there. Yeah, that would be a great place to be.
Totally. Steve, we kind of hit on this, but I definitely think a lot of these questions are sort of similar. Steve's asking, are there any historical corollaries between the current political environment, like specifically U.S. political environment, and any other environment in history? There are a lot of narratives being tossed around, but one of the sort of corollaries being thrown around is Watergate. Do you think that's an appropriate corollary or analog?
No, and the reason is because one of the reasons why Nixon resigned is that he knew that everyone in the Senate was going to vote against him.
Yeah.
The Republican Party was going to vote against him. All the leaders of the Republican Party, all the wise old men were basically saying, you're going to be voted down. So he resigned. That will absolutely not happen. What you will have instead is a fanatically divided country, more divided than ever. Basically, two countries. That's what really worries me now. In Watergate, basically the system worked. Yeah. I mean, the two parties found common ground, as they generally did during that era, and said, okay, yeah, we'll get rid of this guy and we'll move on. And we'll start doing other things. We just put a man on the moon, We still had the idea that America could do stuff, right? It wasn't a great moment for America. We had been defeated in Vietnam, and a few things obviously had gone wrong.
Totally.
But I think that was not the same position. Right now you have a position of two Americas. I think the probability is infinitesimal that you will ever get 2/3 of that Senate to vote Trump out of office.
Totally.
The real purpose of this impeachment process, in my opinion, was by the progressives to align the mood in Congress with the mood of who they want to win in the nomination, which is Elizabeth Warren, and I think, and obviously the collateral damage being Hunter Biden.
Joe Biden.
And you can just see how they're standing. If you just look at Real Clear Politics, you can see as soon as impeachment came in, Elizabeth Warren like this, Joe Biden like that.
Totally.
I think that was the purpose. And I think Elizabeth Warren would rather run against the background of an impeachment process because it naturally pushes all the wind toward the more populist radical candidate, which she has staked out now, and particularly with Bernie, looks like he's sick. He's probably, people are wondering whether he really is a presidential contender. She seems like she's inheriting most of those voters. They aren't. You'd think that particularly a lot of your non-college Bernie Sanders supporters might have gone to Biden, but they aren't. They're mainly going to Warren. So
going back, you famously sort of made the view that based on your fourth turning framework and also based on our economic analysis of where the jobs market was, where the economy was back in 2016, we had a firm view that Trump was a contender, but ultimately would win the election. Do you see sort of similar dynamics happening underneath the hood with Liz Warren with respect to her candidacy? Does she have a credible shot to become U.S. president, or is this kind of a done deal in the favor of Trump?
When in doubt, just to align my expectations, I look at futures markets, and they're out there. You can look at the probabilities, and I think that it's now like 55-45 that the Democrats will win in 2020. And you look at what's the probabilities that Democrat will be Elizabeth Warren. I'm thinking it's pretty dominant right now. I mean, she's way ahead of anyone else in futures markets now as the winner. She's the first few primaries she's going to win. She's obviously going to have a much harder time in the South, and that's where Biden is presumably going to do better. But I think it looks good. And right now, remember, it's 55-45 for the Democratic contender, with unemployment at a 50-year low. So think about where he is positioned right now, and think about what that could be like.
Totally.
10 months from now.
Cool. Well, a not inconsequential risk of that. So that's definitely something we think markets have to pay attention to over the next 12 months. Yeah. Neil, this has been awesome. I appreciate your knowledge on all these topics is encyclopedic, and we really appreciate you sharing your thoughts with our audience. Thank you so much. All right, we'll come back at 1 o'clock at the top of the hour. Will be myself and Daryl Jones. So stay tuned for that. More macro coverage. Thank you on our Investing Summit.